I mean, the maybe the less crazy vision is, well, we want Cow Protocol to become the primary price finding venue for all digital assets, and we assume that digital assets will represent kind of most of the things that people will care about.
Welcome to the Never Die Podcast, your weekly alpha for those who never quit. Today we're talking to Cow Dao, a guest that I've had on the podcast before. Specifically, we're talking to a guy named Felix from Cow Dao. And we're going to talk about all the different products Cow Dao has. They have Cow Protocol, they have Cowswap, they have their Cow AMM, and their MEV Blocker. Now, I know a lot of people readily dismiss DEXs, right? There's like a bajillion DEXs out there, and they're easy to dismiss. I do too. Like I don't invest into DEXs these days. But Cow Protocol and Cow Dao, in my opinion, is radically different than what most people think of when they think of a DEX. And I think that something like Cow Protocol has a lot more potential than most people expect, especially towards the end of the podcast. We talk about tokenization of assets and how Larry Fink thinks everything eventually will be tokenized, and what that potentially means for something like Cow Protocol, which aims to be the number one place where people exchange value in a tokenized world. There's a lot more to this puzzle than meets the eye, and this is a really in-depth conversation into all these different things worth checking out. Let's dive in. Maybe really quickly, just to start off, can you give like a brief, maybe 1,000-foot overview of what is Cow Dao?
Yeah, Cow Dao is it's a DAO, so a decentralized autonomous organization. So which has spun out or has been created by another DAO called Gnosis DAO in 2021, I believe, or 2022 actually. Gnosis DAO voted on spinning out some of their product suites. And Gnosis is one of the original Ethereum projects. It started out to build a prediction market, but on the way realized that tooling for Ethereum wasn't where it had to be. So, worked on some smart contract wallets, which went to become a pretty big project of itself called Safe. Realized that for prediction markets, you need efficient market structures. So we started on work on different type of DEX designs, which then also became their own products. In 2022, Gnosis DAO voted on spinning out one of the product they had built internally, a decentralized exchange protocol that's based on batch auctions, into what is now Cow Dao. And I would say kind of the mission or the vision of Cow Dao is to make DeFi or blockchain technology easy to use and safe and fair to use for everyday users. So to protect the people that use blockchain technology from kind of the risks, security hazards, or just also mechanism design flaws that come by using regular DEXs, and make it a safe and fair environment where people can, well, in the example of Cowswap, for instance, trade, not necessarily carefree, but without worry. In the example of MEV Blocker, transact without worry. So really kind of abstracting some of the pitfalls and dangers away for the next million people that will onboard to Ethereum.
Yeah, and I really quickly just want to explain for somebody listening, because I know there's a lot of DEXs out there. And like personally, as like somebody in the crypto space, anytime somebody's launching a new DEX, I almost like 99% of the time I ignore it. Because to me, it's like everyone just kind of forks Uniswap or whatever and creates a Uniswap clone. And it's a DEX, right? Like a DEX is like maybe one of the most boring things in all of crypto at this point. But there's a reason I'm especially interested in Cowswap and Cow Dao is because it's actually radically different than how a normal DEX works. And it's like such an addictive experience that anytime I have the option to use Cowswap, like I always go to Cowswap. If I'm on Ethereum and now if I'm on Arbitrum, I'm like always going to Cowswap because it is so radically better than your average DEX experience. So if anyone's listening and you're tempted to be like, hey, I don't want to listen to this, it's just a DEX. Like this is not just a DEX, it's actually a lot more, and we're going to get into that. So you guys have 4 different products. You have Cow Protocol, Cowswap, Cow AMM, and the MEV Blocker. And I want to go through each one. But first, maybe can you explain what's the difference between Cowswap and Cow Protocol?
Yeah, it's a very subtle difference, I would say. If for most people, it both kind of stand for the same thing. It's the place where you can make swaps with the best execution and in a way that you're protected from MEV bots, which we might also go into more detail in a little bit. But if you dive deeper, where I would draw the line is that Cow protocol really is the underlying batch auction mechanism. It's really the way that we think trading is supposed to happen on a decentralized blockchain with discrete time and blocks where information gets batched together and emitted at a certain moment in time. And then Cowswap really is more of just one UI, one interface that users can interact with when they want to make those swaps. So technically Cow protocol is agnostic to the user interface that's being used. We've been integrated in Balancer. We've been integrated in Shapeshift and a bunch of other, Safe recently, a bunch of other user interfaces, which kind of all then provide trading volume and order flow to the underlying batching mechanism, Cow protocol. And then Cowswap is really like, I guess, the Cow Dao's flagship UI to interact with that innovative protocol and give access to people without third-party integrations.
Okay, so just to kind of break it down to make sure I understand. So Cow protocol would be the same thing as like maybe RSS. RSS is a technology that all of podcasting, modern podcasting is built on RSS feeds. And so maybe that's the underlying protocol. And then Cow Swap would be something like Apple Podcasts. And so that's a way you interact with RSS, but also Spotify could come build an RSS, or, Amazon, or, whatever company can also come build on this protocol. So when it comes to Cow protocol, other people can build DEXs on top of Cow protocol in the batch auction mechanism. Cowswap is just one UI built on top of it, but really anyone could come build on top of it.
That's a very good metaphor. I think, that hits it very much spot on. It's exactly like that.
Okay. And so maybe it's worth diving into, why is this batch swap mechanism so revolutionary, or why is it different than like just using Uniswap? Like people are used to using Uniswap. How is that different than what you guys have built? Yeah,
maybe to understand that, we should look at kind of what are the issues or drawbacks with the mechanism that other DEX protocols, and maybe we can speak specifically about Uniswap because it's the most famous one, have on Ethereum and on these kind of discrete time blockchains. And some listeners might have already heard this term MEV, minor extractable value, or now it's coined maximally extractable value, because we don't have miners anymore. We have validators and proposers and proof of stake. But basically this concept, there's one entity which every 12 seconds gets to propose a new block and gets to choose in a somewhat arbitrarily manner. I mean, there is some algorithms that the client software that you're running, if you're actually validating on Ethereum, will choose which transactions to include in a block. But Ethereum, the core protocol, does not impose any rules of which transactions, and specifically in which ordering the validator picks the transactions that make it into a block. And now let's assume we have two people that are both trying to buy the same coin. Jesse, maybe, you want to buy some meme token and I also want to buy some meme token exactly at the same point in time. We both go on Uniswap and we, say, okay, 1 Ether, I want to buy this meme coin. Now the price of that meme coin is some price. Let's say you can get, 100,000 of those meme coins for 1 Ether. But as soon as one person buys 100,000 coins, the price of the meme token will go up. And so the second person that comes after will have to pay a higher price to buy those 100,000 meme tokens. And so now the question is, who goes first in the block, you or me, right? Like if you were the validator, you'd probably put your transaction first. If I was the validator, I'd probably put my transaction first. In reality, there's somebody else that's the validator that's seen, oh, look, there's Jesse and Felix who are trying to buy that meme token. Let me buy that meme token at the very beginning of the block, then include those people that already pay a little bit more, and the second one pays even more. And then when they've jacked up the price, I'm going to sell the meme coins that I've bought at the very beginning of the block and basically make a risk-free profit. Because I'm creating the block, I can really make sure that I control all the parameters. And so basically you and I would be paying much more than we should if the market was functioning fairly and safely. And so basically the core problem in here is we're all buying the same token. We're all like trading on the same token pair, and all of our transactions make it into the same block. So they are dispersed to the rest of the world at the same instant in time, right? There's no first come, first served. It might even be that, if you're sending a transaction from America, then some validator in America might see you first. But if I'm sending my transaction from Europe, then another validator who sits in Europe might see my transaction first. So it's really hard to say who was actually first. So theoretically, at least that's kind of the fundamental of Cow Protocol. All the trades that are on the same token pair in one block should execute at the very same price. This idea that there's a first come, first served maybe makes sense in continuous time markets like the equities trading, where you have that notion of really like 1 millisecond or 1 nanosecond difference. But on Ethereum, there's new information dispersed every 12 seconds. And if two people want to buy the same token in the same block, they should be paying exactly the same price. And this change in mechanism, basically going from this pseudo-continuous first come, first served price time priority to a batch, batch with uniform price clearing, I think is the term that we like to use in the literature there. So having two people that trade the same asset in the same block also receive exactly the same price is the core fundamental difference between Cow Protocol and other DEXs such as Uniswap.
Okay, so there's a lot to break down, and it sounds complicated, but I think it's actually really simple. It'd be the same concept as if, say, you were going to buy some milk in a store. And let's say in this store, for whatever reason, the first person that buys the milk gets it for $1. The second person that buys milk gets it for $2. And the third person that buys the milk gets it for $3. Now you and me go get in line. I'm first, so I get it for $1. You get it for $2. And there's no one third in line. Well, the store owner is like, hey, by the way, I'm going to jump in front of you guys. I'm going to cut you guys. So I get it for $1. And then you guys can buy after me. So then you have to buy it for $2. You have to buy it for $3. And then I can sell it. I can sell after. This analogy is kind of breaking down with the selling part, but they get to sell it for a profit afterwards. So in the case of a crypto, the price goes up every time somebody buys. So say it started out as $1, first person buys, goes up to $2, then to $3. Well, if they cut in front of you, now they can sell it for $3 and make, like you said, a risk-free profit. And so that's how a traditional market works. And what you're saying is with Cowswap, you've essentially made it so that that doesn't happen. So nobody can unfairly get a better, get cut in front of you and steal what would have been your price. Now everyone has fair access to be able to buy these things at the honest price or the right price. There's no one extracting value ahead of you.
Yeah, I mean, I think another metaphor that I'm thinking sometimes about is if you were sending someone out to buy a newspaper for you and you don't remember exactly what the price of the newspaper was, right? You remember it was somewhere between $5 and $10. So you give that person $10 and you say, please buy that newspaper for me. And, now let's say somebody overhears that you've just, given, maybe it's an, elderly person that's given a younger person that task for an errand and the person runs off to try to get that newspaper for the person. Somebody else overheard this and knows, this errand runner now has $10 and is, basically can go and buy this newspaper for up to $10. And so what they could do is they could, of course, assuming there's only one newspaper left, but they could go to the store, buy it for, $6 or $7 and then turn around and say, oh, I have this newspaper for you. It costs $10. Do you want to buy it? And so they basically, extracted your, maximum willingness to pay, which for this meme coin, if we're really excited to buy it, might actually be quite high. We don't care if it goes up a little bit and a bit more and a bit more. But it's still unfair, right? In a fair kind of, some information symmetric market, then I should have gotten that newspaper for $6 or $7. And basically Cow Protocol, we saw the problems with the mechanisms as they were designed, taking just this standard, first come, first served, principle and applying it to a technology where we only have new information every 12 seconds. And then everything that gets emitted can be arbitrarily reordered by one central, well, not central, it's changing all the time, but for a given block, it's at least one entity that can reorder it. And that creates a bunch of problems. And we've built Cow Protocol to overcome those problems. And at the same time, almost as like a side effect, make trading much easier and less technical for people that just want to trade one asset for another.
It's worth noting that we're giving these examples that take a long time, but with something like crypto, this is happening in seconds or milliseconds. Like when you actually go to place your order, a bot runs right in front of you. Like you click swap, a bot goes in front of you, buys it, and then after you buy it at a higher price, sells it. So they get the price you should have gotten, and then they sell based off you pushing up the price. And so it's not like people are buying like hours or minutes even ahead of you. It's like literally right after you click the button, this initiates a bot to run in front of you and jack up the price, which is pretty messed up. But there's there's more to first off, I'll say I use Cowswap all the time, and I see that, right? So the reason I use it is because I get the absolute cheapest price, because not only are you guys like a DEX, but you guys are like a DEX aggregator. So you guys are looking on Uniswap, you guys are looking on every other platform out there, and you're saying, hey, what's the cheapest price to make this swap? And in some cases, I'm assuming you're looking at like, hey, I can buy some from Uniswap, some from this liquidity pool. And so you're figuring out the fastest and cheapest way to get these tokens for me. And then you're executing that and giving me the cheapest price. And I've made a surplus of like, it's like $22,000 I saved or got extra in tokens that I wouldn't have gotten had I used, say your average normal deck. So it's pretty amazing. It's like a really big impact. And I think that's what keeps people attracted to and using something like Cowswap. Okay, so you explained some of the differences between Cow Protocol and Cowswap. What about Cow AMM? What is that?
I would just want to make one addition to how you just described the reason that you're getting the best price. It's not actually that Cowswap or Cow Protocol itself is computing the optimal route. In fact, maybe to back off a little bit more, this idea of batching was kind of at the core of even the version that we built as part of Gnosis DAO to bring more liquidity to prediction markets and kind of have this idea of one price per token per block. But back in the days, we really just tried to settle volume inside this batch against one another, and the batch was kind of closed off to the outside world. So we didn't have any access to on-chain liquidity, and we required really to have participant mirror or bring that liquidity into the batch. And that failed miserably just because, composability on Ethereum, open access to different DEX protocols is one of the reasons why Ethereum took off, frankly. It's a huge asset to the chain. And so the novel thing that Cowswap brought over the first prototype that was built as part of Gnosis was the idea of taking that idea of batching and proposing one price per token per block and putting it as a thin layer on top of existing on-chain liquidity sources. And so now you'll have some users in the batch trying to trade, but you'll also be able to match those users with any liquidity that you can find on-chain. Now, the idea of combining this entire lake of liquidity, user orders, on-chain liquidity, and coming up with this uniform price vector, basically what is the clearing price that settles demand and supply, is actually a very complex mathematical problem. It's non-tractable, and so no kind of individual party would be able to solve it to optimality at any point in time. So another very core concept of Cow Protocol is that the protocol itself actually doesn't do any matching or any computation. It offloads those it offloads the settlement finding to external parties, which we call solvers. Other protocols might call them fillers or resolvers. I think in traditional finance, they would just be called matching engines, and exchanges would have their own matching engines. But basically, Cow Protocol is an exchange where the matching engine is decentralized. And so you can envision that every block we dispatch the current set of orders that we've received, and let, right now, I think it's 25 entities that are competing for how to optimally match the set of user orders with all the liquidity that they can find on chain, that they might have as an inventory if they are market makers. And they can also match users directly with one another. So if you're selling Ether and I'm buying Ether, then there's no need to go to Uniswap at all and pay a fee. We just match at the midpoint and both make a surplus, make some price improvement. And so, by virtue of having that decentralized matching engine network, we can credibly guarantee that you're getting the best price that is available on chain, because 1inch is one of those matching engines. Paraswap is one of those matching engines. 0x, Kyberswap, you name it. All the DEX aggregator are participating in that in that competition on top of some other solvers that are either private market makers or Cow specialized solvers. So really, like, if the best price was on 1inch, you would get that on Cowswap as well. If the best price was on 0x, you would get that price on Cowswap as well. So in a sense, we are that meta DEX aggregator that just gives you the best you can get elsewhere, plus better if there are additional efficiencies through trading directly with one another, with batching even people together and saving on gas. Like, all those things can give you structurally better prices than on other exchanges. And that's why you'll usually find the best, or almost always find the best price on Cow Protocol and Cowswap.
Okay. So what you're saying is you guys use what's called, or I've heard explained as intents. And so it's an intents-based architecture where you guys will, I as a user will say, hey, I want whatever token. I want some Ethereum. And then there's this open competition between these solvers to get me the cheapest price for Ethereum. And I think there's speed involved as well. It's like whoever can get it cheapest within a certain time frame is the one who wins. They get like a little bit of a special reward, and I get the like maximally best price. Or maybe another way to think about this for maybe the average person would be if I wanted a chocolate milkshake and I was like, hey, my intent is I want a chocolate milkshake, and I type it into my like magic phone or whatever. And then 100 people are competing to get me a chocolate milkshake. I don't care how they get it to me. They could bring it by helicopter. They could use a drone. They could drive down the street. They could jog, run. Like, you don't care. That's like it's up to the solver how they execute that. And that's where you mentioned the coincidence of wants, where, they could look at another user who says, hey, I'm selling ETH. And I want to buy it, and so they just match us together. So then I'm getting the absolute best price because we're even going around on-chain liquidity, and so that's how intents and solvers work, and that's like really the backbone of Cowswap. Cow Protocol is this intents-based architecture, this kind of solvers competition who are constantly working to get that user the best price. And this is all automated. Obviously, these aren't real people who are like sitting in front of their computer. It's all an automated thing. But it opens the door for like new solutions that maybe you guys couldn't have even thought of.
Right. Yeah. Another metaphor that I like to think about there that we came up in the very early days was of an airport where there's a currency exchange booth, and they're selling euro for dollar and buying euro for dollar, and you see a queue of people waiting to do their exchange. And now you could think about someone, in our case, it's multiple entities, but you could just think of someone walking around with like a megaphone in front of that queue and asking like, who wants to sell euro? Who wants to buy euro? And then they collect all the buys and the asks and basically, batch them together, settle them exactly at the mid price that the exchange booth displays, and then just takes whatever is left, the excess, and then goes not just to the exchange booth that they were waiting in front of, but maybe they, know all the exchange booth prices in the entire city or in the entire airport. And so they, go to the one that's cheapest. And so, yeah, I think that idea of first getting the best price on the market, even if you're just by yourself, but then having extra efficiencies when there's multiple people involved, and you can either amortize your costs of trading in the same direction or completely amortize your price impact if you're trading in opposite directions, is kind of the core reason why Cow Protocol gives you best prices.
And this is all complicated, and for the average user, all they got to know is like, hey, if you use Cowswap, you're gonna get the cheapest possible price, period. Like, and again, as I mentioned, I've had a surplus since using Cowswap, which has only been since I think late 2022 or maybe 2023, a surplus of $22,000 in extra tokens that I got that I wouldn't have gotten had I just been using something else. So it's really impactful and really amazing. And again, it's very addicting because, if you want to go to a place where you're going to get the best price, and there's this whole competition happening and these batch auctions and this MEV proof, like that's when you go to Cowswap and you get that price. But something I'm really not familiar with at all, and it's kind of new since the last time I talked with you guys, is this Cow AMM. And so traditionally, like Uniswap has their own liquidity, right? Like they supply their own liquidity. Cowswap didn't do that. They tapped into other liquidity sources like Uniswap or, whatever. Now you guys do have your own kind of liquidity piece to this puzzle, and that's Cow AMM. What is that, and how is it different from, traditional AMMs?
Yeah, so I mean, Uniswap, the protocol itself doesn't provide its own liquidity necessarily, neither, maybe on the Uni token, because that's a token that the DAO holds. But they provide a product whereby other people, the LP providers, usually like, normal users like you and me, for instance, can provide liquidity for a token pair and then step away and let that liquidity rest inside the pool. And that pool is programmed in a way that it will automatically trade against other traders that are coming and want to actually make a swap. So, historically you have these kind of more active traders that are coming in and want to, buy a coin, take a position. And then you have passive liquidity, which was provided by other active people before, but which is now just residing there and trading according to some algorithm, looking at the, how much of token A and how much of token B does it have. And if it has too much of token A, it wants to sell it. And if it has too much of token B, it wants to sell it. So it's adjusting the price basically based on the inventory automatically. And so when we started out, Cow Dao, we were thinking of, okay, where do we need protection the most? Which are the people that are being, abused kind of the most right now. And those were in our eyes traders, because we had these MEV bots, these, kind of, very, very, predatory front running and sandwiching attacks, which were really hurting, everyday people that just got onboarded into crypto. And that just, felt like the first target user group that we need to protect. However, over the last couple of years, research has, progressed and we've come up with this model also for the, MEV damage, or the basically tax that is, paid by those passive liquidity providers, which is known as LVR, loss versus rebalance. And we can maybe in a second go into what that exactly is and how that works. But basically our idea was then, that this very simple principle that we've established in the beginning, one price per token per block. If two people trade the same asset in the same block, they should be paying the same price, can be applied to passive liquidity provision as well. If you're buying a token, then that should be the price. If you and I are buying the token, we should get the same price. But if somebody's selling us the token, they should also get the same price. And it doesn't matter if that's a, third person that just happens to be there at the same time, or if that's a passive liquidity provider that, a month ago decided to put some Ether and some US dollar into an AMM because they want to pursue a passive investment strategy. And so we've kind of applied that very core principle that Cow Protocol is all about, one price per token per block, to the concept of LP providers, and thus added another user group into the set of users that are protected thanks to Cow Protocol. And yeah, so far our studies have shown that the returns for those LP providers are significantly bigger than for those of comparable Uniswap or Balancer or SushiSwap. Like there's a bunch of these protocols out there, pools. So we are quite hopeful that we can not only use that liquidity to create more coincidence of wants and thus fuel the price improvement on Cow Protocol, but also just give a better experience and better return on investment, frankly, for LP providers.
So when you say the returns are better than like an LP provider on Uniswap, like how much better? Is it like 1%, 2%, just kind of ballpark?
Yeah,
where would you place that?
It's hard to exactly quantify this, and there's always, of course, it depends on the pool by pool. We've released a paper last year where we've looked at USDC Ether pools over the course of like 6 to 9 months. We have at the beginning of this year put money where our mouth is, and Cow Dao has deployed a bunch of like test pools on Cow ETH specifically. So the governance token of the DAO pooled with ETH is one of the reference pools. We also have a USDC ETH pool as a reference pool, and in both of these pools the edge, so had you deployed the same amount of funds into a Uni V2 style pool at the same time, over the course of, I think it was 3 months, the value that you had in a Cow AMM was 3 to 4% better than the amount of money that you had in a Uni AMM.
Would you say then is Cow AMM more of like a somewhat competitor to Balancer and Curve, or is it in its own like unique category?
Well, if you're concerned, if you're concerned about the actual shape of the curve, then I would say it is, at least the product that we're launching now, it's similar to Uni V2, SushiSwap, not so much Curve, I would say, but Balancer weighted pools. If you think about kind of what we are trying to solve, then I think we are a competitor to all types of AMM, because all AMMs that exist out there today are suffering from LVR. There's been some smaller projects trying to work with oracles or other kind of tricks that tip off the liquidity provider when the price changes what the new price is. So it doesn't do the mistake of selling to the arbitrager at the outdated old price. But Cow Protocol basically already has that. It's not an oracle. It's really just the outcome of the batch for which we have a pretty 25 solvers competing, a pretty competitive competition happening. So we really thought like, well, okay, we actually can solve LVR with something that's already a side effect of the batch. But yeah, I would say in terms of kind of the addressable market, it's all of AMMs, not a specific AMM protocol.
And so we've talked about Cow Protocol, we've talked about Cowswap, and now Cow AMM. What is MEV Blocker? How does this fit into the whole picture?
Yeah. So when we started out with Cowswap and Cow Protocol, we were talking to other projects, and you mentioned it earlier. Cow Protocol is an intent-based trading system, and we started out in 2021. Intent-based trading systems weren't around. We kind of, I wouldn't say invented it. Limit orders had been around, but we are really the first one pushing intent-based trading systems to mass adoption and getting users to actually use it for their everyday swaps. Not a lot of people were using limit orders before at the time, and really this idea of just saying what you want, not how you want it, was something that was pioneered by Cowswap and Cow Protocol. So when we reached out to integrators and other parties, and they were like, oh, well, no, but we are used to users signing a transaction. We're not going to make them sign some message and then that message is not like visible on Etherscan. No. We want transaction based trading, and we want them to be MEV protected. What can you offer? And we didn't really have an answer for them at the time because, well, if you want MEV protection, you need to get away from, having ordering of transactions depend the outcome. So you need to like get them into a batch. And for that, you need these kind of messages that can be batched together in one transaction. Otherwise it just doesn't work. And so, together with, some of our partners along the way, agnostic, so Gnosis DAO, and also Beaverbuild, we sat down to think about what can we offer for users that for some reason or for whatever reason are not willing to move to this intent-based system, but also for use cases in which Cow Protocol just doesn't work. There is MEV in NFT swaps, in LP provisioning. There's some tokens that are not supported by Cow Protocol. So there were also users that were saying like, oh, I'm already using Cowswap, but there's still these kind of use cases where I might be leaking MEV. What can we do? And so we came up with this system which basically uses the PBS infrastructure that has been created by Flashbots and Ethereum Foundation and kind of become very successful after the merge, to use the fact that there is a set of entities called builders which play a very repetitive game with the people that send them their transactions. And so you can actually impose, if you have enough transactions, you can actually impose certain expectations and rules on them. And if they violate them, then, well, they won't receive any more flow from you, which is bad for them because that's kind of part of their core business, to receive transactions, to then build blocks and make money. And so you can use that relationship, that very repetitive relationship, to require certain protection. So you can, for instance, take transactions and give them to a builder and say, please don't front run this transaction or sandwich it or do anything else that's like straight up malicious to the user. If you do, then we'll monitor this. We'll observe. We, might sometimes send you bait transactions where you think like, oh, this is great, I want to sandwich it. But if you do, then, well, you lose access to the flow. So, and we are sending you, many transactions every block. So we can actually on average see if you're abusing that flow or not. And by having this extra relationship, yes, you can first of all prevent any bad MEV from happening, but then you can also, there's some type of MEV, we can maybe talk a little bit on what that type is, that is at least not harmful for the user. It's still not good for the user, but it's neutral. It's not actually changing the outcome that the user receives, but, it's still, there's, let's say you are trading, a very large amount of a meme coin, and this meme coin has an AMM on, let's say, Uniswap and on Balancer. And because you're using the Uniswap UI, you're only going to trade on the Uniswap AMM. But you're making a very large trade, so you're bringing up the price on the Uniswap AMM, but because the Balancer AMM is not touched, the price stays the same at the Balancer AMM. This, of course, is a bad trade. You shouldn't have been doing this. You should have used a DEX aggregator or Cowswap. Then solvers would have seen that there's two sources of liquidity. They would have bought at the same pace, and both prices would have gone up in lockstep. Everything would have been fine. But okay, we're here now. We can't change it. you already lost money is already lost. So what do you do now? Basically, there's now arbitrageurs that are racing in to come exactly after your trade to bring those two AMMs into equilibrium again. And they are willing to pay a lot of money to be just after you, because they have to be, they cannot go in the next block or the block after, because there's other arbitrageurs watching and they all saw what happened here. Oop, this is now out of whack. And so they need to bid almost again all of their value. So let's say they can make 1 Ether by trading those two pools back. They will probably bid 0.999 ETH to get just behind you in that slot. And what MEV Blocker does is it basically facilitates that auction for the back run, and it refunds 90% of the value that's bid back to the original user. So if you're making a bad trade, we cannot undo that trade. We cannot give you a better outcome on the trade specifically. But if there's people bidding to, come and clean up after you right after, we can at least take most of that value that they are bidding and refund it back to you in the form of an ETH rebate, which, can be interpreted as, well, you can just go around and trade and we'll pay you for your trades. I mean, it's not exactly like this. You have to make certain things that you should better do in Cowswap and not even get into this position. But it does, again, lead to the fact that instead of bidding all this value to the validator who takes it and just considers as extra revenue for validating the Ethereum blockchain, it goes to the person that has originated the value, the user that made the unfortunate trade.
Recently, Cowswap launched on Arbitrum. Are there plans for you guys to launch on other chains? That's like my biggest complaint about Cowswap. Is I can only use it on ETH and Arbitrum right now, but I'd love to use it on Base and everything else. Like, what's that look like?
Yeah, so specifically Base, we're actively looking into. We've seen, of course, the rise in usage. We also think Coinbase has a very credible narrative of how it can onboard the next million users onto blockchain technology, and why they, will be a significant. I think Base has a very strong case. We kind of politically, we are not at all, we are not one chain maximalists or anything. Like, we think we want Cow Protocol to become the primary price finding venue for digital assets on Ethereum, and that should be or blockchains in general, like EVM based blockchains, and that can be any EVM based blockchain. So we want to go on all the chains that exist. One of the, of course, challenges is that with these intent-based protocols, it's not just the smart contract and kind of, the UI that needs to be updated. You need to have a competitive network of solvers that are actually supporting each chain, that are competing for best prices in order to have the, user protection aspect and the things that are so important to us. So we want to be mindful of the pace at which we deploy, just because there is more to the product than just a smart contract and a UI. But yeah, there's no, I think given enough time and resources, we'll come to all the chains that exist.
What's the roadmap for Cow DAO? Like, what do you guys have on the horizon that you can talk about?
Yeah. So Cow AMM launch is imminent, and I think very exciting and a very big product for us that we're very excited about. That will also probably shape most of this quarter's kind of attention. We are looking to expand to more chains, so I think Base is on the horizon. As I mentioned, we are looking into improving some of the long-standing feedbacks we've received. Speed is one of them. Decentralization is another one. We already have 25 solvers kind of providing the solutions, but there's still some aspects around how the solution, how they receive access to the orders, for instance, and then how the solution then gets put on chain, where, there's still like some, the auctioneer basically is still in some sense centralized, and we have ideas how with data availability we can make that completely decentralized. And so, yeah, I think those are like the main themes that you'll be probably seeing in the next year. But we tend to also just have a very kind of flexible, or like, we go with kind of the challenges as we go. We're kind of, very, I would say, not rigid in our planning. So right now the focus is on Cow AMM, and we'll see where that takes us. All
right. Last question. In your mind, what do you see as like the end goal of Cow DAO? Like fast forward 5, maybe 10 years, like where do you hope to see Cow DAO? Is it like we hope to see that most volume on the planet when it comes to DEXs is going through Cowswap, and so we're maximizing coincidence of wants, we're like everything's hyper efficient and users are being protected? Or what's the end goal overall for Cow DAO?
Yeah, I think I mean, the less crazy vision is, well, we want Cow Protocol to become the primary price finding venue for all digital assets. And we assume that digital assets will represent kind of most of the things that people will care about. And, so yes, we want to make it safe and easy for people to onboard. We think right now MEV and the games that are being played on chain is a major friction for everyday normal retail users to come on chain and actually do their trades and their transactions there. So we want to kind of help fuel that growth. But if you want to go maybe even a little bit further and like crazier, then well, money was a nice way to kind of get us away from the barter economy and kind of store something. You produce something today, but you only might want to buy something tomorrow. So you just swap it into money, and then money is like the store of value that you can use like later on to buy something else. But I think, we've also seen risks or issues with money. And I think kind of fundamentally, I personally think that a nice future would be that people are just exposed to kind of ventures or productive participations in things, may it be DAOs, may it be companies, may it be real kind of world assets, and that's your portfolio and you want to be exposed to that. And you might have a very different view, you might live in a different country, have different things you care about. I'm a French resident, so I might have some stake in my local boulangerie because I just really like having fresh bread in the morning. But you might like your, I don't know, I don't want to be too stereotypical, but like your burger restaurant or whatever you might be into. And so, but we still can make it very seamless for us to transact and interact, because we have this kind of global liquidity pool where people, are willing to trade, not just with this common numeraire US dollar, but, I could trade my boulangerie shares with some other person that, is offering some intermediary token, which then can be traded in what you care about. So really like kind of have everyone just be exposed to what they care about, but still making seamless transaction of value and exchange of value possible through peer-to-peer trading, through multi-dimensional batch auctions with uniform clearing prices.
Wow. Okay. So that's when I really think about it, it's such a bold and kind of grand vision of like, if you believe Larry Fink, where he says everything is going to be tokenized, the stock market, like literally everything will be tokenized in the future. And your guys' vision is, hey, we want to be the place. We want Cow Protocol, not necessarily Cowswap. That's one front end, but Cow Protocol to be the underlying engine that like all commerce essentially in tokenized assets is done on. And if you really think about that, if you're successful at that, and Larry Fink's right, you're talking, and this is a big number, quadrillions of dollars worth of volume happening on something like Cow Protocol. And that maybe is the end game of like, hey, we are the center of commerce for all tokenized assets on the planet, and everything is tokenized. That's a crazy outcome and a crazy vision, and maybe makes me feel how small-minded we are right now in the crypto space, just focusing on our little niche. But when you zoom out, it's a pretty big and grand thing. So
I agree. We have a long way to get there, but I think we should definitely put our work into getting there. And I think there's definitely a good chance that Ethereum can be that technology.
Yeah, I agree. All right. As always, none of this was investment advice. As a disclosure, I do hold a lot of Cow tokens. Obviously, I'm a big believer. I love the platform. I love using it. And so that is a disclosure. And you should always do your own research and look into these things. This is more informational for you to learn about how these things work, for you to get an idea about where the space could be going, and some insights from some really smart people who know the space better than anyone, like Felix here. And it was great having you on here, Felix. And it was awesome having you.
Likewise, Jesse, thank you very much for having me. It was a pleasure to talk, and talk soon.